So what that tells you is the gross margins are going down, and plus the depreciation costs, the costs that they are spending on data centers, they have to depreciate those servers, right? That's going to eat into the margin. So we are talking about at least a 4 to 5% margin impact for 2025 just from the data center costs, the depreciation costs. And so clearly there is a gross margin degradation happening here. And the revenue growth is decelerating, which is what we are seeing in 1Q. The CapEx guide is what they gave, on Friday, so no change in that.
Yeah.
But clearly the data center expenses are eating into the margins.
Which is something Gina Martin Adams has said, watch with all of the companies reporting, but the tech guys as well in terms of margins and seeing some pressure on margins, which is what we're seeing.
That didn't seem to be the case with Microsoft, though.
No.
So that's the surprise here, that Microsoft didn't call out, that kind of a margin impact from depreciation expenses in their quarter, at least from the print that I saw.
Yeah.
But clearly it is having an impact on Meta.
When you dig into what the CFO has been saying as well, and ultimately, she's talking about how the single largest driver of their expense growth that you speak to is going to be infrastructure costs. They say higher operating expenses, depreciation as well of those assets, of those data centers more broadly, of the chips they have to keep buying again. But then they say employee compensation will be the second largest factor as we add technical talent.
It's a good time to be that technical talent, right?
It is. You can go and charge a pretty penny if you've got a nice computing.
So what is that? How do you read into that? Does that mean that the folks who are the engineers doing the AI stuff are in full demand? Who is that?
Areas of infrastructure, monetization. So interesting, they obviously monetizing their overall business. Reality labs, generative artificial intelligence, as well as regulation and compliance.
Okay.
They are the HR go-gets for this particular year. And they are actually overall saying that headcount has ticked higher, 10% year over year, despite this efficiency mode they've been in. There's also this note, the majority of 2025 CapEx to be directed to core business. What's the definition of Meta's core business? Is it the family of apps, the Instagrams and the WhatsApp? And to say, okay, we're going to invest in that. So don't worry, investors. We're spending money on the company, on the parts of our business that make money. Is that the message there? I mean, Mandeep is your man to ask what's a core business, but I'd say Reality Labs isn't it, even though their company name is Meta?
Yeah, look, I think overall they will be prudent when it comes to headcount growth. They may have to pay more for the AI talent. That's what they're alluding to. But at the same time, they are continuing to lose money on Reality Labs. I would have expected, that would be your offset. If you see margin degradation, you offset it in terms of Reality Labs losses. We're not seeing that.